Moving on with the second part here on binary options and looking at the triangles as continuation patterns. FairBinaryOptions.com. First part, we lay down the theory. This is the theory. You have a downward trend here, then a contracting triangle, and then price should move to the downside. We should look minimum at the thrust of the triangle to come. Now the same is valid in a bullish trend, of course, when the prior move or the move prior to the triangular formation points to the upside, then the move after the triangular formation resumes in the same direction as the previous or the first move was. Our example is a bearish one, and I would like to put this into perspective with the euro US dollar here. From my point of view, this move started at this very moment of time, when this triangle, but this one acted as a reversal pattern. I'm not talking about this one. I'm talking about the triangle as a continuation pattern. So we have a move to the downside, and this move to the downside starts from here and ends here. So I will make it, let's make it a bit bigger, like this. Let's change the color for it. Let's make it red. So this is the first trend, or the bearish trend prior to the triangular formation. Then we have the triangle, and it goes with wave A to the upside, and this wave A is actually this wave A here. So wave A to the upside, then the B wave to the downside, and this B wave to the downside is this one here. But as you can see here, as a difference when compared with our theory or example here, this is a contracting triangle, a horizontal variation of a contracting triangle, in the sense that the wave A is the longest wave there. But in this scenario here, the B wave is the longest wave, as you can see, AB. This is being called an irregular variation of a contracting triangle, but it is still a contracting triangle that is acting as a continuation pattern. So A, B, the C wave to the upside here, the D wave to the downside, all the way to the downside here or here. So A, B, C, D, E, and this is the moment where the contracting triangle ends. So let's try to put the labeling on it. This would be wave A, this would be the B wave, this would be the C wave, the D wave here, and the E wave here. Like any contracting triangle, this one makes no difference in the sense that, or it is no different in the sense that it travels between the A and C trend lines and the B to D trend line, like this. So this would be most likely the D wave, like this, and the B to D trend line. And by the time the triangle is formed, we should consider the thrust of the triangle, like we discussed on the first part of this project. Now the thrust of the triangle comes approximately 75% when compared with the longest wave of the triangle. But the longest wave here is not wave A like it was in our theory or the model that we presented on the first part, but it is 75% on the longest wave, or compared with the longest wave. In our scenario here or situation, the longest wave is the B wave here. So all we have to do is to take a Fibonacci retracement from the highs to the lows here, then to take 75% and then project it by the moment that the E wave ended or the triangle ended. So from this moment of time we should project 75% to the downside. Now if this is 61, then 75% is probably something like this. So I would say from these lows like this, so this would be around 75%, And then if you take the result here and you put it by the moment that the E wave ended, as you can see, 75% or the thrust of the triangle is completed. What does this thrust of the triangle means? Well, it means that this validates the triangle. If price, for example, move here to the downside, never reach the 75% and then strongly break into the upside, it means that this was no contracting triangle and probably it was something else. Now, because the thrust of the triangle comes, it validates the triangle. It is a triangle that acts as a continuation pattern in the sense that the previous bearish trend or the trend prior to the contracting triangle broke to the downside or continued after the triangle has been completed. Thrust of the triangle done, triangle completed, acted to the downside or broke to the downside, acted as a continuation pattern, everything falls into the same scenario. Everything falls into the bearish trend, and therefore all we had to do here is to focus on buying put options. Why? Because this one acts as a continuation pattern, so we're looking for a downward break. Now, whenever you buy binary options or whenever you trade binary options, you should look at the expiration date, and the expiration date should be given by the time frame that you are trading. In this case, this is a 1 hour chart. So after the C wave completes, all we have to do is to find places to buy put options. So normally I would buy put options when the B2D trend line is broken, and then I would buy put options with invalidation level being when price goes above the C wave there. So around here, this would be another place to buy put options. Expiration date, well, this triangle broke on Thursday, so expiration date would be anywhere between end of day or end of week. And even if you're looking here, this is for the C wave, this is a classical rising wedge, and by the moment the 2 to 4 trend line here is broken, this is another bearish sign, so another place to buy put options either with end of week or with end of day expiration date, as basically price never looked back. I mean, we had a spike here when Draghi was speaking on Wednesday at the press conference, but that was all. Thank you very much for being here. We just completed triangles as continuation patterns. It was a classical example on something that really happened this week on the Euro-US dollar. Binary Options Academy here on fairbinaryoptions.com, and all these analyses and recommendations are possible due to the help of our sponsor here, Lionhive. Bye bye.